Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, you had a very busy week attending 3 conferences in Vancouver, but they were 3 very different kinds of conferences. Can you maybe explain that?
Well, I attended 3 conferences. The first was the Metals Investor Forum, which took place on Friday and Saturday, and I spoke on Friday. The second was the Cambridge House Conference, which took place on Saturday and Monday, and it was more of a retail type conference. And the third one was the Roundup, which was a technical conference that is largely for industry people. They are 3 completely different styles of conference. The first conference has 6 speakers. There was myself, Gwen Preston, Joe Mazadumar, Eric Coffin, Gwen Preston, Brian London, Jordan Roy Burns. These are all newsletter writers who make their living selling subscriptions to the public. Newsletter writers who are of the free newsletter type, who get sponsored by a company to like their company until the sponsorship payment stops. Those kind do not get to speak at this type of conference. It is smaller scale. There are only 25 to 30 companies. These are companies that have to be covered by one of the speakers, the newsletter speakers, in order to be invited to this conference. And the audience is drawn from the subscriberships, the readerships of the speakers. So it's a smaller, cozier type of conference. I like them because it gives me a chance to hear each company's 10-minute presentation. It's a bit tough for these juniors to do a 10-minute presentation, because in 10 minutes you cannot really explain why you are right about what you are trying to accomplish. You simply have to give a story hook that gets the audience's attention. Then they go afterwards to your little table outside the speaking hall, sit down, and then you get the technical interactive presentation. And I did end up doing that with one company, Atomera Minerals, which I had given up on over a year ago. I was very impressed, and I have just made it a new bottom fish recommendation. The Cambridge show is a larger venue where there are several hundred companies exhibiting, and then there's a main speaker hall which tends to be dominated by some sort of high-profile groups which market their particular stories to the audience. And then there's a number of workshops on the side where companies do corporate presentations and sort of less important newsletter writers pitch their trade in those shows. This show is great for milling about, checking up on companies that you're already familiar with, accidentally bumping into companies. For a newsletter writer like myself, it's a bit frustrating because I can't go 50 steps without being buttonholed by somebody who probably isn't even exhibiting at the conference. There's a lot of sort of business to business going on there. But this year, this conference was very well attended. The mood was good. The Metals Investor Forum show the 2 days before, they have a registration cap. They hit that limit during the week before, so anybody who wanted to come had to go on a waiting list, waiting for somebody to drop out. Good luck. Nobody ever says that they're planning not to come. The Roundup was also very, very well attended, and this is a technical show with the bigger companies doing presentations, a lot of geological presentations, all the equipment vendors exhibit, and they have the core shack, and this tends to be dominated by juniors who put their core out on display, have lots of good diagrams there, and they spend 2 days there talking to geologists, not so much investors, but newsletter writers such as myself who attend get to see a much more detailed technical level of explanation than you do at the bigger sort of retail type shows. There I talked to Sirius Resources and New Legacy, who had core on display. So we're going to give you an update later in this episode. And also InZinc was exhibiting there for the first time ever tucked away in the far corner of the exhibit hall, where I managed to track them down, and I got a new presentation from Kerry Curtis on INZINC's West Desert project, which suddenly opened my eyes to a very exciting similarity to Arizona Mining's Hermosa Taylor project. And the big theme, though, that I picked up in all these conferences was a shift away from optionality type feasibility demonstration, where you take these marginal multi-million ounce gold deposits that don't work at $1,200 gold, and you kind of spend money demonstrating that they would work at, say, $1,600 gold. There is a growing embrace of discovery exploration. Even First Mining Finance, the company that has been absorbing all these beaten up little juniors with deposits, and then they sort of just inventory them in a so-called mineral bank. I was shocked at the Metals Investor Forum to see that they are spending money on some of the more interesting projects to see if there is something much better in the system than is already known. And I asked the CEO, why the shift? And he said, our shareholders, and that tends to be a lot of the sort of bigger Bay Street institutional types, they're saying, we don't want to just sit here and wait for Trump to manage to do something that makes gold go up. We want some action in our investments through things that you do, that you control, and spending some of that money you've raised on exploration to find something that is perhaps bigger and better than we already know you have. We want exposure to that sort of upside. So this is also evident in the attitudes of some of the bigger producers such as Goldcorp and Agnico Eagle, who at the roundup in separate presentations emphasized that they are interested in discovery exploration. These big companies have realized that greenfields, or so-called grassroots exploration, does not work inside big company systems. The salaried employees all live in terror of being fired because they were too aggressive about something. They live in fear of having their budget disappear on them for their favorite project. And if they actually do come up with something, well, there is no reward. Big companies are excellent at brownfields exploration, mine site exploration, where they look around their existing mine to see if they really do understand everything, and then they often use the trick of condemnation drilling in some area for a new waste dump to go and discover stuff that was even better than what they were mining before. So the attitude taken is they become more aggressive about buying up to 19.9% equity stake in juniors, which have strong technical teams and which are have a district scale story, not just some smallish deposit that or target that may or may not be something, but where there's some sort of conceptual basis for this. And they are now saying we're going to have, maybe a dozen such companies that are essentially outsourced discovery exploration. They do not get any back-end rights to any of the projects, not even first rights of refusal for farm out. They do get rights to maintain their 19.9% interest through any subsequent financings. And the value to them is they have a foothold in the company. They're kept abreast on what's going on. They can even use their internal technical resources to help the junior out with the stuff that they're working on. So it's kind of a win-win for everything, and it leaves that 100% project ownership upside available to the risk-taker investors who put in also money through private placements.
Now, you met with Sirius Resources at Roundup's Core Shack to get an update on the Chichu project in Quebec. Didn't Goldcorp invest $1 million earlier last year when the stock was only 13 cents?
Yes, a year ago in February, this was actually a quite exciting development because Sirius was this little toiling geologist company below a dime that I'd flagged as a bottom fish, which had been working on the Chichu intrusive system, where they had identified sort of low-grade gold mineralization and had started to get some higher grade intervals. And this is located about 17 kilometers southeast of Goldcorp's Eleanor mine, which started production about a year and a half ago, and is going to produce an awful lot of gold ounces, but probably not quite as much as was initially expected, at least in terms of achieving the throughput capacity of the milling complex. And so Goldcorp was very interested in finding potential ore feed in the surrounding area, and the Chichu project emerged as a very promising new play. Goldcorp already had over a third of the Eleanor South joint venture, which covers the southern half of the Chichu intrusion. So at the time they bought 9.9% with rights to go all the way to 19.9% by participating in future financing, and that really pumped the market. Other investors in Quebec saw, well, if this is good enough for Goldcorp, it's good enough for me. And Sirius, which had been struggling over the past few years to raise money, ended up raising $6-8 million, and the stock ran as high as $1.40 in mid-August before the gold price turned tail and the whole market turned very cold as gold cycled back below $1,200. Now, the company has reported lots of results. They still have 4 holes pending from the program that finished last fall. The big thing that they did last year was to realize that, we've been drilling all these holes from in a southwest direction, targeting the contact between the intrusion and the country rock metasediments, and they would get these long low-grade intersections, and here and there they would nick something, and then they got the idea that there may be northeast, southwest structures within this intrusion, and we're drilling subparallel to them and only nicking them. So last year they turned around and drilled a whole bunch of holes in a northwest direction and did get some high grades, but they also got a lot of surprising low grades even when they were seeing visible gold. And the problem they're tackling there now is that this system has a nugget effect. The gold occurs in free form, and it's very difficult to measure. They've had delays delivering results because they go back and do metallic sieve assays, which are more expensive than fire assays, and attempt to capture this nugget effect. And the market kind of got bummed out late last year because they did not see a series of holes that enabled these structures to be stitched together, where you can do sort of back of the envelope calculation, say, okay, here we see like 300,000 tons of 5-gram emerging. The company has not quite reached that stage. However, they are convinced that these structures are present, and they are going back in there this year to do more exploration. But the winter drill program that they're doing going to start in mid-February, this is going to tackle several areas where they have not done much work. One is farther on the northern flank of the Chichu intrusion, and all these areas, it's swampy, so they couldn't really get into these areas during the summer. They're going to do some more drilling up there. There's a soil gold anomaly up there. Then they're going down to the border where Azimut and East Main and Goldcorp have the Moni showing, which is a high-grade outcrop. Azimut and company and friends drilled in that area, got some sniffs, haven't yet figured out. Sirius is going to go in there and drill in this area because they think this is part of one of the structures that cut through their property. So we'll see if they get a better handle on what's going on there. But what's probably going to be the most interesting target they drill is the third one, which is in the southwest property corner, just to the northeast of the JT showing, where in the 2006-8 period, East Main, Sirius, and Azimut got very excited when they tracked a gold and till anomaly all the way to this showing, drilled it, and never really came up with any sort of size to it and gave up. However, the part of the intrusion is up ice from this, and the possibility is that there's a substantial gold mineralization in this area. And so Sirius is going in there for the first time to drill in this area. It's overburden covered, so they really can't tell. Just to the east of this, there is lots of outcrop. They sampled it. It's unaltered and pretty much barren compared to the rest of the intrusion. So if that the big regional Golden Till terrain is indeed indicative of mineralization that has been scraped out, dragged down ice by glaciers, and everything else covered by dirt, they could have a brand new focus, and it will also reignite interest in the JT area where the Dominique Doucette thinks maybe East Main and Azimuth gave up too early.
You mentioned that New Legacy had a core shack display at Roundup for its Red Hill gold project in Nevada. Red Hill is not from Barrick's Pipeline Cortez Gold Rush deposits, where over 50 million ounces of gold have been outlined. New Legacy has spent most of its effort since 2012 reverse circulation drilling the shallow low-grade iceberg targets. Did New Legacy have trays of rock chips or actually cores on display?
Well, that's a clever question, Jim. Trays of rock chips are not very interesting. You can look at them and sort of see, okay, there's some quartz here, there's some carbonaceous shale here, and so on. It doesn't help you see how the mineralization formed, how if the gold or the sulfides, how they relate to the rest of the mineralogy. So no, New Legacy did not put out little rock chip trays. They had segments of core, 3 to 5 inches, from the few core holes that they have done, and these were all intended as sort of demonstration of the different styles of mineralization that are present on the Red Hill project. They did have one segment from the twinned core hole that they have drilled on the Avocado anomaly, and the reason I made the Red Hill project a Discovery Watch candidate last year is the Avocado anomaly sits underneath the basin gravels and is a sort of several hundred meters deep. It's indicative of a sulfide system. The question always has been, is there gold associated with it? So until you drill and determine that there is gold, it could be just another pyritic body of no economic value. They had drilled a hole a few years ago that was not particularly encouraging, but last year's hole came up with 200 meters of quarter-gram gold, which is not economic, but it was this continuous quarter-gram gold smoke in a Carlin-type setting that got everybody very excited. And so now the question is, where in this 2.5 by 1 kilometer anomaly, where are there high-grade zones that could be mined as an underground deposit, similar to Cortez Hills type of system to the west? And they had to drill a core hole basically to understand the geology at depth, to see how it behaves. They did show some photographs of the core boxes of the key areas, and geologists were heard mumbling, "Wow, this looks really good. You really got to follow this up and see where it all ends up." They still have assays pending with regard to the core hole itself. They expect to have it maybe in the next few weeks. I don't expect anything particular special because it's basically the RC hole drilled again, but it will help them confirm that, yes, there is gold mineralization in it, and they can better see where it is associated with, because there's going to be spikes within this hole that they can better relate to the rock styles in this hole. But what really got me excited was at the core shack was this company has historically consisted of 3 key people. There's Albert Matter, the chairman, former stockbroker turned promoter. There's James Anderson, the younger CEO put in charge of getting everything organized. And Roger Steininger, sort of old school geologist, extremely knowledgeable about Nevada, was responsible for drilling the discovery hole at Pipeline, and this was, I think, like hole 70 or 80, and he managed to accomplish this by not following the instructions of his superiors and drilling where he thought it might be interesting to know what's going on. But it's been kind of difficult to get one's head around the story because Roger is of this old school where they literally load an entire geological data set into their head, and they spin it around in their head, and then they talk to you, and then many polysyllabic words come out, and your own head just starts spinning, and you want to run away. And then they get out their paper and pencil crayons and start sketching all this stuff, and then people say, okay, well, this doesn't look too impressive. So what the company did after they raised all that money last year and have now $15 million in the treasury, they said, let's hire all younger geologists and have them digitize all this stuff that Roger has accomplished. And so it was a real pleasure talking to the new chief geologist, Derek Unger, who has undertaken this task of digitizing all this data. So it isn't just Roger who can understand what is going on and try and explain it to others. They can all now see it and see, digitally spin it around, model it, show different data set layers and all this stuff. And so now we're seeing a whole new level of graphics come out to help explain it to us. And this, I think, is going to really help boost the audience. It's also going to enable a team of people to guide the exploration process at the Red Hill project. And the one thing that really caught my attention was they have another chargeability anomaly. It's about 700 meters deep, and it's between the central and the north zones, which are near surface zones where, it's going to be 0.8 to 1 gram per ton gold. It's oxidized. That means water has, circulated through it, rainwater and so on, and dissolved the pyrite. All this Carlin-type gold, the gold is associated with the pyrite, encapsulated by it. That makes it refractory, in many cases difficult to recover. You have to really cook it in an autoclave to break it up, and that's a lot more expensive. You can't heap leach this type of sulfides. You can't heap leach sulfides in general. So the company's goal has always been to demonstrate that they have 1 to 2 million heap leachable open pitable ounces. But now, as they're doing this additional analysis and starting to understand the structures and the geology in that, the idea has emerged that not only do we have this big thing sitting out in the basin, the avocado anomaly with all kinds of smoke and possibly a fire nearby, we also now have this situation here where we have this leakage smoke at surface in these younger rocks and deeper where there could be even more prospective rocks. There's now a big sulfide anomaly that could represent the feeder system, and since we already see the gold leakage at surface, there's a good chance that this could be a classic Carlin style, Cortez Hills style, high grade, 5 to 15 gram per ton underground mineable resource, and then you go from something like, maybe a couple of million ounces of low grade to maybe 5-10 million ounces of high grade. And this is the dream for Nevada. I heard people say that this particular project right now is the hottest project in Nevada in terms of, wow, you throw enough drill holes at that, you have a very good chance of delivering another world-class discovery. And because it's now a junior owns 100%, yes, Barrick owns 25% of the, or 20-25% of the company after deciding not to back in for 70%. It is a company that has an institutional shareholder base. It has a retail shareholder base. It has a major with a foothold in this project that's in its own backyard. If we get a big discovery, a Cortez Hills type discovery out of this, this stock would do extremely well. It would make money for a lot of people. And, even though we have this whole attitude out here of, we're heading back into discovery exploration, there is still this glass half empty sense, which means it's still a struggle to get people to really believe that success is a possibility rather than failure and inevitability. So a major discovery like this would be equivalent to, say, Voisey's Bay becoming a reality in early 1995 and making a lot of money for a lot of people, and then inspiring optimism as the glass goes half full in an awful lot of projects. And this is one reason that I have made New Legacy, which was a bottom fish, a spec value hunter recommendation. I think this story, even though it's totally discovery exploration, has the potential to be one of the stars this year.
Discovery Watch with John Kaiser will be back right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch. We're speaking with John Kaiser. What did you learn from Kerry Curtis that makes you think In Zinc's West Desert project is much more exciting than a zinc optionality play?
Well, just to provide a bit of background, I started following the West Desert project when it was called Crypto in 2006, and InZinc was called Lithic Resources, and the company acquired it, and there was already an existing zinc resource. Zinc started running to $2 in 2007-8 as part of the whole sort of China super cycle story. And so the company, spent a fair bit of money upgrading the resources, converting them from, inferred to indicated and so on. And ultimately, they delivered a PEA in 2010. And a PEA is a preliminary economic assessment that tells you what the economics of the project are, with pretty big error margins of, accuracy level of 30 to 35%. So it just gives you kind of a sense. Unfortunately, by then, zinc was below $1, and at $1, this project was not very good. The recommendations was either find more ore with the existing grade that you have, or find a way of making the grade of the ore you do have richer, which is possible by doing some infill drilling and increasing the density and confidence so that you can use the higher grade that this type of skarn mineralization is capable of hosting. And the company slumped, and we had to sort of endure it being a sub 10-cent stock while zinc, tried to go through 120 several times over the past few years, failed each time, ended up back at 80 cents. The company redid the PEA in 2014 by treating the magnetite rather than as a waste dump disposal cost. They turned it into a product that could be shipped and not make a huge amount of money, but at least eliminate costs and produce a little bit of extra cash flow. But even then, you really needed $1.20 for the project to be worth developing. Well, since then, zinc is now $1.25. The project is back in the money. Everybody on Bay Street is excited about zinc, that zinc's time has finally come, that the shrinking supply in the Western world is going to keep shrinking, that Chinese supply is not going to rise and accommodate any new demand or shortfalls from disappearing supply. So there's this big bullishness there, and the company, they had a change of management last year. Kerry Curtis spent all summer going through all the data, rethinking it, doing kind of that, loading it into his head that Roger was doing all the time with New Legacy, and then putting it in a form where now he can show it to others. And what's really interesting is, in addition to, yes, there is this lateral expansion potential for the skarn resource. It's about 60 million tons of ore-grade material. They can do this by drilling to the west and to the east, basically following the contact between the quartz monzonite intrusion and the younger devonium carbonates that have soaked up this massive sulfide mineralization right into at the contact with the intrusive itself, which is pretty much barren, but all the metals ended up seeping into the limestones. So they can get that going. But what was really interesting was the way he showed that deeper down, sort of below 700 meters, the mineralization style changes to a lower temperature carbonate replacement style mineralization. Also massive sulfide, zinc, copper, and gold, silver in it. But in this case, it's hosted by an older form of carbonate, which has these shaly horizons, the little beds within it, that end up getting replaced by mineralization when the fluid flows along it. And it's on the other side of a fault, and this fault existed before the mineralization. The rocks, the way they are located, existed before the sort of quartz monzonite intrusion came in. And to the east of this, about 3 kilometers at surface, there are these old fissure veins from which a couple million ounces of silver were hauled along with lead by the old timers, and it's in these younger Devonian rocks, which unless you have the higher temperature fluid flow, you don't really get anything in them. But now the hypothesis is that down below, where the intrusion is known to sit as this big heat engine, following these carbonate replacement zones within these older carbonates could result in an awful lot of high-grade mineralization. And only 2 holes have been drilled under these old lead-silver veins. One kind of bent off into nowhere and didn't yield anything. The other managed to make it through the fault and got 3 meters of 3.5% copper, 7% zinc, and 1 ounce silver. And nothing ever was done with it, but it's like, 1.5 kilometers to the east of where all the work has been done. And I'm looking at this, and so Carey's, of course, has already drawn the comparison to Hermosa Taylor, which is a very similar situation. The Arizona Mining had spent $40 million focusing on the near-surface oxidized silver, zinc, manganese central deposit. Off to the northwest, there was an old fissure lead-silver mine that Sarco operated in the old days, and didn't really get much out of it. And then rather perversely, even farther to the northwest, Sarco had drilled a very deep 3,000-meter hole where they intersected very high-grade carbonate replacement sulfide mineralization. And a couple of years ago, when Don Taylor was assigned the task of, okay, what do we do with this disaster on our hands, he started chasing the sulfides, the carbonate replacement sulfides, at the base of the pit limit, started following them down plunge, and with the drilling, basically realized, oh my gosh, we have this giant carbonate replacement system of multiple levels of zinc, lead, silver mineralization. It probably goes right underneath that old fissure vein stuff of that Sarco mined, and it projects right towards that deep hole where the mineralization is very strong. We know there is a big giant intrusion in this area that probably is also related to the nearby Red Mountain copper system. And now we have it was last year's star play, went from 35 cents to as high as 340. In the past few weeks, they have been producing phenomenal assays as they do more detailed drilling and get into the sweet spots of the system. And, Carey and I are looking at this and we're saying, this is almost reverse. Here we start at in zinc. We start with the deeper zone, sort of between 200 and 700 meters. And then what we're going to do is we're going to work our way back up towards the surface. Unlike at Hermosa Taylor, this system doesn't daylight anywhere. It does not make it to surface, so there's not going to be any outcropping former CRD mineralization in this area. But there's a potentially very substantial high-grade blind system beneath these old lead veins. And what the company now wants to do is raise up to $5 million, 70% of which will be earmarked for simply doing the lateral extension, the safer skarn-type mineralization, chasing that, adding to the tons. But another 30% is going to be allocated to drilling some scout holes, some deeper scout holes to see what is going on with this carbonate replacement style mineralization on the other side of the Juab faults, connect the dots as was done at the Hermosa Taylor, and maybe show that there's something of similar scale. And if there is, this is a much better jurisdiction for developing a mine than southern Arizona near the town of Patagonia. It's all patented land, so they do not have to worry about the BLM permitting issues. So this is why, after sitting down with Kerry and sort of thinking, okay, are we finally going to get the optionality story on the road and go do some more feasibility demonstration work and get this thing developed and into a mine? Well, now there's also a possibility that we could have this thing turn into a major new discovery, and because so many people missed the boat with Arizona mining, Bay Street didn't even get on board until the stock passed $1, and retail to a large degree ignored it. I think this makes this one sort of a beautiful hybrid play where you've got the zinc optionality and you've got the potential for a very sexy discovery that scales it far beyond what we already know this project has.
John, some exciting stuff, especially the conferences that were well attended and had a very positive mood. It's been great talking with you.
Jim, I'm pretty pumped, and yes, I think our Discovery Watch shows are going to become very popular if I am correct about the way this mood has shifted towards discovery exploration.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.